It's definitely been busy, for sure. I mean, the information about tariffs came out overnight with the Treasury Secretary making some indications, which in a lot of ways is helpful because it gives us some guidance, but it's still very wide open. And I'm happy to talk about how it impacts our companies a little more. And then obviously with, with all of the DeepSeek news, and I think your earlier guests have covered a lot of the relevant topics on it, but for our companies, and we invest at relatively early stages. So we're a venture capital firm with offices in the US and the UK, and we invest across both geographies. For our companies, which are relatively small, so we don't write the huge checks to invest in foundational model infrastructure, we invest in companies who are harnessing the application layer. Yeah. And for us, in a lot of ways, this is good news because innovation and competition generally sparks more innovation at lower cost. So for us, this is good over time.
Yeah, if they're not involved in the picks and shovels or the architecture, but they're putting applications on top, which is, I think, what you're saying as well, that's extraordinarily exciting because their cost base has just gone down aggressively.
It means our investment dollars can go further and they can start to act faster. And it also means if they want to develop versions of their own foundational models for purposes over time, that's a possibility too.
It does bolster the fortunes of VC, doesn't it? I mean, we've been talking for the last year about PE getting into VC world because some of these fundraisings were so large because of the compute power required. I mean, I was talking about the Series B that Mistral AI did for $600 million plus. I mean, that's not VC territory traditionally. The Series B is much lower. So if this means we've got a lower cost of entry now in technology, surely that is certainly great news for VCs and more startups.
I mean, it really is. And I would say in our experience, on both sides of the pond, one of the advantages of investing in European companies that expand to the US is that the capital efficiency is almost always greater. European companies get further on smaller amounts of money. There are obviously downsides to smaller checks, and some of our US counterparts have been able to grow faster with larger funding, but we also find that the capital efficiency translates when European companies grow to the US.
That's an extraordinary thing you just said. European companies are better when it comes to the small amounts of capital they have at their exposure than
because they have to.
Because I get it, but I find that extraordinary that because it's a lot tougher or you have less capital available.
Well, and one of the things that we have found, so for us, one of our USPs is to help companies commercialize into the US. So take a European business, help it commercialize into the US, and obviously grow the valuation and the market size. What we do find is often that capital efficiency stays. So even though they're able to raise larger check sizes as they move to the US, they're able to get further with less. And I think the entire backdrop of DeepSeek means that that's going to be even more enabled over time.
Yeah. What does it mean for the very, very large valuations we've seen for private companies now? Because I feel like we've had this wake-up call in the industry before where so many private rounds came at such high prices and then there's reset moments over time. This feels like another reset moment. Perplexity hasn't gone public yet, OpenAI hasn't as well. What does it mean if those two companies could be revalued by the market?
Well, I mean, you were talking to Mark earlier about this, and I think there's obviously downward pressure. And I mean, he's probably better at guidance of 20 to 30% of a discount, which we've seen overnight happening. So I think that's a likely outcome for the near term. But the reality is we're in the middle of a hype cycle, or even at the beginning still of a hype cycle. So we are going to see massive fluctuations every time there's a new technology. I think we weren't really prepared for this level of shock in terms of a new technology at this price coming out, but there will continue to be fluctuations. And while there's downward pressure today, there are going to be further innovations that start to recoup that price over time.
To that point, already very quickly, Wedbush was talking about physical AI, that it wasn't just the applications here, it was going to be things like robotics that starts to use this AI, it's autonomous cars, I mean, it's all the real physical stuff. Do you agree with that now if we've got cheaper technology at the model stage and less need for compute power, then it means we're getting to future technologies that seem to be right out on the horizon, they're going to be pulled forward much quicker. Does it change your VC model?
I mean, I think it does, yes. I mean, look, for me, the ultimate goal is that there's automated cars that drive my kids everywhere and I no longer have to do that. So if that brings it closer, all the better. But I think, yes, absolutely it does.